Hello, good evening.
Good news for you. Two services
Good
starts
evening, sir.
this Sunday,
Mr.
5th
John.
June 2022.
Good evening, sir.
Good evening.
Thank you,
Okay,
sir.
Mr. John, let me briefly run through this thing you were talking about. So, you were saying it was Euro USD, Abi?
Yes, sir. Euro USD.
Do you remember the level or the area?
If I entered from the beginning, the first candle
On Friday?
that that did the move. Is it Friday or Thursday? Yeah, it should be Friday.
Is it sell or buy?
It's to buy.
On that, it bought on Friday.
Yes, sir. On Friday.
Okay, so if you're buying, like
Yeah.
in this case, if you look at this on the 1 hour, what time frame did you use to take your trade?
15 minutes.
What time frame did you use to do the analysis?
4 hours.
So your target should be on the 4 hour.
Okay.
Probably it was this low you used, Abby.
Yes, that area.
It was this low because of this something that looks like order block and fair value.
Yes. Yes.
So since your trade was off a 4 hour, which will be on this candle, you had two options. If you execute a trade on a 15 minutes and your analysis is off 4 hour, your target should be on 4 hour. You have to develop that that discipline, because if you look at this trade on the 4 hour now, probably you were looking at this bullish candle. Levels here is going to be this high, and probably whatever is up here. So if you look at this on the 15-minute time frame, let's say you entered on any of these candles here.
Yeah.
Let's say you entered on this bullish.
Yes, on that. Candle.
If you entered on this bullish candle here, your stop is going to be like 45 pips because it has to be below this low. The first TP is going to be this high. That's 41. Your next TP, is going to be this other high. That's 60 pips. And you notice immediately after price crossed that second level, what happened? Started going down. So if you execute, if your analysis is from 15 minutes, your target should be on that time frame. You get. So what I will advise is when you have this type of trade, if you're doing 0.1 or 0.02, split it into 0.01, take 0.01, 2 lots. You understand? So that when you take TP1, you allow TP to run. What you will now do with TP2 is that as price is making new higher lows, you just keep moving your protective stop loss to protect what you have. That way you would preserve, that way instead of you just taking small profits, because sometimes you need to allow your winning trades cover for your losing trades properly. So that's just the easiest way. And it is in this kind of trades, because you know what they've done here. They've taken buy side, they've taken sell. Definitely, you know they are going to go in the opposite direction. Definitely, in this kind of trade, there's something you need to understand. When you know you have an edge, you can increase your lot size when you're very sure of the trade. Because when you know that since they're taking here, they are ranging, price is ranging, it's not trending, it's ranging. You understand? So most likely, if they take this, they'll most likely seek the next level. So since they've taken what is above this high, they are going to come for this area. So since you saw them take it and start to turn, you just wait for them at the highs of that 4 hour. Don't get too greedy targeting the ultimate high here because you know it's Friday. It may not go too far. So
Mm,
that's just it.
okay. Although that 45 stop loss is so high for me. Maximum I use maybe 25
And
or 30 as my stop loss.
you need to be able to sometimes factor it in. If you enter here, well, price will, let me explain something now. Too small teaching. If you look at this 50 minutes, there's a swing high here.
Yes.
You have two options. Either you buy at this break, at this candle's break, or you wait for to buy at the fair value gap.
Mm,
So if you buy at this fair value gap, your stop loss will come to 32, 33. Or worst case, since this is a fair value gap, you put your stop here, that will give you 21. So that if price now drops and knocks below this low, you then know that they are not yet ready to move up and you readjust. Okay, so that does it, Mr. John. I hope I've been able to sort your issues.
yeah, it's okay, sir. Thank you.
Okay, so good evening, everybody. Good evening. Welcome to this week's FX review for the 20. Let me get my book open. For the 25th to 29th of July. So, as always, we're going to start with NASDAQ 100. We're going to start with NASDAQ, dollar index, Euro USD, GBP USD, gold, Euro GBP, GBP CHF, and pound yen. So we're going to start off with the NASDAQ. Looking at the NASDAQ, let's start from the weekly time frame. The NASDAQ on the weekly, it still has a bearish setup. Price has broken this new low. So this is the new dealing range from this high to this low. So that's the new dealing range now. So you can see that price has broken this high. So that's like more like a change of character, which means that price may try to move higher because this low, this high didn't make a new low. So price broke this high. So there's a possibility price may try to correct higher. So for now, long term on this pair is still downside, but we have a medium term possible corrective move. So if we go to the 4 hour, to the daily time frame, it is very, very clear. The daily, this high was used to sweep this low. When price rallied, price didn't make a new low. Instead, it broke this high. So on this daily time frame, medium term, we have a bullish setup. But price is currently at this bearish order block here. That's this last up candle before all this one. So you would need to wait to see what price does. So looking at this pair, if this bullish trend is supposed to continue, price may try to fill this imbalance here. This imbalance here. So once price comes in, that's possible support, because if you look at the daily, it's a bearish engulfing candle. So there's a possibility price may come down. If it finds support here, then it might continue higher. But that depends on what happens on the 4 hour time. Because on the 4 hour time frame, this is the last down candle before this high. Price has closed below it. So that points that short term, we might see a little bit of a downtrend, just like I said. Price may retrace a bit before continuing higher. So that's what we're seeing on the bar. So short term, we may see a little bit of a down move. That depends on this, because if you look at the 1 hour, you have this high, we have this low, we have this. So we have a break of market structure. This is a bearish breaker. So there's a possibility that this fair value gap from this point to this point, if price runs in here and doesn't close back above it, then that move down to this daily fair value gap here might play out. So if you now get that set up on your daily time frame, your targets will be this low. That's price has already taken it. So your most target to be this low. So if you now put in your annotations, that daily fair value gap comes in somewhere down here. So once price comes in here, this might be an opportunity to continue a long trade to the upside. So that's it for the Nasdaq. So looking, the next one we're going to look at is the dollar index. The dollar index weekly, long term is still bullish. But if we go to the daily time frame, short term, medium term, we are having a corrective move lower. Because we can see this last down candle before this up move, price has closed below it. This other block here has been knocked out. So there's a possibility that any rally on this pair might be an opportunity to take a short position. So if you go down to your 4-hour time frame, you will understand that price has been ranging. And see that price has been ranging. So you watch this low. If price knocks out this low and retraces back, then you might see a move down. And if that move down starts, where will price be targeting to fill this imbalance here? This imbalance on the day, that's where price will be targeting. So if you put in your annotations, it's going to look something like this. So if you put in your annotations, that daily fair value gap is pretty big. So this is it. So the best on this pair is to look to sell into rallies. That will be the best play on this pair, to look to sell into rallies. Let price create a lower high, then you short from there. So you have this your dealing range, this point to this point. So if price rallies higher, gets rejected, you can take a short position to this point, consequent encroachment of that daily fair value gap at this level. So the next one we're going to look at is Euro USD. So looking at the Euro USD, the Euro USD on the weekly is still bearish. I have a break of market structure here. I have a break of market structure. So long term on the Euro, we're still pointing to the downside. But medium term, as on the daily time frame, we have a change of character here. This is classical in the sense that this high was used to make this low, but price has now closed above it. So that tells us that medium term, we're going to see a little bit of a corrective rally on the Euro USD, probably targeting this point. That's this fair value gap at 1.0275 to probably up to this point first. Okay, so if we look at this now on the lower time frame, so the best on this pair is to look to buy into dips. The best on this pair is just to look to buy into dips. Let price make a higher low, maybe it drops, makes a higher low. Then if it starts to rally, if price starts to rally, then your first target is going to be this height, then probably up to this point. So the Euro USD, as you can see, we have a low, we have a high, lower low, and a break. So on the Euro USD, on the 4-hour, there's a bullish setup, bullish breaker. So buying dips will be the best play on this pair. So we have what we could pass for a bullish order block. So if price drops in here and gives you bullish evidence, then you might take a long position. Price was effectively distributed. There's no fair value capping. There's nothing of that sort. So you could either use your FIB from this dealing range low to this high. Look for equilibrium and look to buy below the equilibrium to target these highs and any other higher level. So the next point we're going to look at is GBP USD. So looking at the GBP USD, price is still bearish. Long term, price is still bearish. So the next pair is the daily time frame. So if you look at the daily time frame, you have a change here. So that points to the fact that we might be seeing bullish correction on this pair going into this week. So if we look at it on the 4-hour, it has been an ugly consolidation. It has been an ugly consolidation on the 4 hours. You can see this is a high, this is a low. Price has also been ranging in between. So, but if you look at this pair, he's sitting above his 1-hour order block and fair value gap. So if this fair value gap holds, there's a possibility that price is going to continue high. And if it continues higher, you'll be targeting Friday's high and into this structure pointing. So the next one we're going to look at is gold. So gold long term has been on the downside. Although price came few pips to this low, I was thinking it would spike this low, but it did not. I was really thinking it would spike this low. But on your MT4, there was a low between here and the low on Friday. So that was what price spiked on MT4, but on trading view, it's not there. So if we look at this on the daily time frame, we already have a slight change of market structure. This high that was used to sweep this liquidity, price has closed above it. So that points to the fact that we might be seeing higher corrective prices. So if we go down now to the 1 hour time frame, if we look at this pair, price seems to be staying above this high. So this pair is bullish. Any down opportunity on this pair, as long as it stays above 1712, this level, as long as price stays above this level, any dip will be an opportunity to go long on this pair. Any dip will be an opportunity. And if it starts, you'll be targeting 1745, then 1752 area for longs. So the next pair we're going to be looking at is Euro GBP. This pair is a puzzle for now. It's a puzzle for now. Long term is bullish. You get, but if we go to the daily, it has a bearish setup here. So this is a retracement, but this upper week is my reason for concern. The problem is, will price leave it and move lower, or will price try to refill part of it and drop to the downside? Again, so those are some of my concerns. But if you look at this, it has been basically random. So for this pair, any rally will be an opportunity to go short. For this pair, any rally on this pair will just basically be an opportunity to go short. Because there's already, this swing low has been broken. So any rally on it will be an opportunity to go short. So the next pair we're going to look at is pound CHF. This pair long term is down. Long term is on the downside. There's no bullish setup yet on it. But you can see it's kind of like in a very, this is a range high, this is a range low. It's in that consolidation. Although price came for this low here, spiked it and closed back inside. So now if we come to this pair on the lower time frame, you need to see a close above, first above 1.1589. If you get a close above it, then that will signal we have a medium-term low here. And then we might see a corrective move on the GBP CHF. But for now, most likely any rally on this pair will be an opportunity to go short. So the last and not the least is pound yen. Looking at pound yen, it's in a kind of a range. It's in a range, bullish, I would say bullish consolidation. Then the next on the daily time frame, so the last but not the least is pound yen. So looking at the pound yen, we have a lower high here. We have a lower high here, but price is sitting above this daily order block here. So there might be an move to try to fill this imbalance. And should price fail to go higher, then we might see a move lower on this pair. So if we look at this on the lower time frame, it's very clear. Can see series of lower highs and lower lows. So you just on the 1 hour, this is your dealing range. This point, that's 16 165.16 to this low, which is at 163.07. So you just wait for price to rally. If it gives you bearish evidence, then you look for a short position. As long as price basically stays below 165.15, as long as price stays below that level, most likely it will continue to the downside. Because if you look at it from the 4-hour, we have a change here, a break here. So any rally on this pair will be an opportunity to go for short. So if you're looking for short opportunity, you have this 4-hour fair value gap and this bearish order blocker. So that settles it. Do I have any questions? So is there anybody who want me to look at before we call it the night? Hello. So in the absence of any question or any pair, so I thank everybody for taking your time to attend. I wish everybody a beautiful night's sleep, a blessed week, and happy trading ahead. So thank you all and good night.
Thank you.